Hey everyone, welcome to our webinar on increasing sales and profitability by quantifying the value delivered to your customers and proving it to them in selling situations. We may have a few more people joining, but let's move ahead now because I know you're all pressed for time. A lot of webinars are just filled with fluff. But the approach and tools that I will share today will help you exceed your growth and profit targets and create a real marketing success story for you. Before we get started, I need to go over a few quick things. I'm going to be moving pretty fast. Please remove all distractions. Turn off phones, close your email, and be prepared to take notes. You may be performing at best practice on one or more of the dimensions of our approach, but the big success stories come from putting it all together and achieving best practice in all four capabilities that we'll discuss. If you feel you're already at best practice at one capability, please resist the temptation to start multitasking. You may miss some valuable tips in the other areas where you would most benefit. Let's just focus on getting results together. If you have any questions, just type them into the chat box, and I will respond to them later, even if it's only by email after the session. Or at the end, you'll have an opportunity to book a free consultation with me, and you can ask it on our call. Our client results are not typical. What I'll show you today will give you what you need to take your marketing to a much higher level and start generating tangible results. Hey, before we get started, let me tell you who this is for so that you know if you're in the right place. This webinar is for you if you feel your customers are not giving your product or service enough credit for its superior performance compared to the competition. If your sales team is telling you that they need to discount prices in order to win sales. If you have been given aggressive growth and profitability goals and are worried that you won't achieve them by doing what you've been doing. If you realize that the best career opportunities go to those who can consistently generate tangible sales and profit improvement, and you want to create that kind of success story for your current offerings, then this webinar is for you. You are not alone. Some studies show that as few as 1 out of 5 businesses achieve their growth and profitability objectives. Now, part of that low number is due to having more aspirational or stretch goals that are admittedly tough to reach. But think about it. If you had an approach to more profitably grow with your existing offerings, you would be a top performer. The real problem is that you don't have a proven system to quantify and prove your value to your customers. I say this because most companies do little to no quantification, and when they do, it's often highly variable in rigor and therefore not that credible with decision makers. To make matters worse, your customers don't have the time to assess the differences in value. And your competition is getting better, so those differences in value are getting harder for the customer to see. In short, the game has changed. What may have worked in the past is not enough. You have to raise your marketing and sales effectiveness to a whole new level. If you could measure the value that your products and services deliver to your customers and use it to drive marketing and sales, you will increase your sales win rates, raise the profitability on those wins, either with a higher list price or with less price discounting. You will shorten the sales cycle to meet your targets in time. And lastly, you will consistently create career-building success stories with tangible bottom-line results. In the next 40 minutes, I will share how you can move beyond an incomplete understanding of your customer value to unique, in-depth insights about the value required to win the customer's business. How to measure value in terms that matter most to buyers, the impact on their bottom line. how to recognize the most common mistakes in quantifying customer value and how to avoid them, how you can use your more in-depth understanding of customer value to improve your marketing effectiveness, and how to recognize the most common problems when using value calculator sales tools and how to avoid them. That's a lot of ground to cover, but the process creates great success stories. Before we get into this, allow me to give you a brief introduction of who I am so that you know why you should invest your time and energy in building these capabilities. I've committed my 30-year career to developing cutting-edge strategies and tools to help clients innovate and manage their customer value for growth and profitability. I founded Axios to partner with thought leaders and progressive clients to pioneer the best methods and tools. As a result of my work, I was flattered to be appointed to the faculty at Northwestern's Kellogg Business School, where I currently teach the business-to-business marketing course at the MBA and executive levels. Kellogg is consistently ranked as the #1 business school in the world for marketing. The approach that I'm going to share with you has worked in all kinds of industries and applications. I stopped counting after I hit 100 projects with market-leading companies like these all over the world. Before I founded Axios and began teaching at Kellogg, I led the Building a Market-Focused Organization Center of Excellence for a global consulting firm. That's a fancy way of saying that I worked with Fortune 500 companies to help them figure out what value was required to win the customer's business, and then help them get their organization to consistently and profitably deliver that value. I had terrific clients, and together we created great success stories that were highlighted in Harvard Business Review and other business publications. And I was really well paid for it. With my leadership role, I was expected to spend more and more time selling projects and less time working directly with clients to generate results. I flat out hate selling, and working with my clients to create the success stories was always the fun part. I also felt like we were throwing a lot of people and money at problems because we didn't have the approach or tools to be more precise. If you throw enough resources at anything, you are likely to get some improvement. But my clients didn't need such an invasive consulting effort to create impressive results. They just needed better tools and some coaching to generate the customer value insight and convert their customer value into growth and profit. When I was ready to leave that firm, I struck up a partnership with Professor James Anderson at the Kellogg School, who is the world's preeminent B2B marketing thought leader with 6 Harvard Business School articles and the best-selling B2B marketing textbook, among other publications. His concepts relied on quantifying the value delivered to customers and using that knowledge to drive all of your business decisions. The concept made intuitive sense to me, so together we began building a set of strategies and tools that clients could implement successfully without a large consulting team supporting them. It made so much sense, but we needed real-world proof. We found a very progressive client who shared our conviction and worked on 3 of their products. All 3 products saw a 10-to-1 payback on their efforts within 12 months of implementation. This project in particular convinced me. One of the teams was working in the part of the business that sold paint to the big automobile companies. The purchasing managers at automobile companies are pretty tough. The margins were thin. Our client developed a service to not only sell the paint, but also clean and maintain the paint application equipment in the factory for an additional fee. Originally, the client offered the new service and was turned down. Then we were brought in. We built a customer value model to quantify the value of the new service. Realizing that the value was at least 6 times the original price, we recommended that the client triple their price and go back and pitch that same service again. This time, the customer agreed to buy. Think about that for a minute. This was exactly the same service that the customer rejected at 1/3 the price. The only difference was that we quantified the value in such a way that the purchasing manager could justify it to their management. Quite simply, if you don't know your value, you are missing sales and leaving money on the table. Ultimately, our client built a $100 million add-on service business out of this initial effort. Think about your company's current approach to sales and marketing. Are you getting the sales and profit margins that you want? Are you leaving money on the table? Are your sales win rates lower than they should be? Let's talk about the specific capabilities that will grow revenues and profit with your existing product and services. The rest of the webinar will focus not only on the 4 capabilities that generate these results, but I'll also highlight the most common pitfalls when trying to do it yourself. You don't know the value that you deliver to your customers unless you understand and can articulate it on 3 levels. The first level is where most marketers stop, and many don't do a great job with this basic step. Here, we need to understand specifically what happens to the customer from the customer's perspective when they use our product compared to using a competitor's product. Does it run better in their production line? Does it have fewer errors? Is it easier to store? Does it need fewer repairs? We call this level the performance difference. Second, ask yourself, or better still, ask your customer, so what? Why do you care about how it affects the production line or error rate? As Clay Christensen recently described in the Harvard Business Review, customers have jobs to be done. I like to think of it as outcomes that they are trying to achieve. To develop a fuller understanding of these outcomes, make sure you understand how frequently they happen and how big the impact is when they do happen. These outcomes are what will motivate your customers to buy. Third, how important are those outcomes to this customer? What are they worth in monetary terms? Customers are so busy these days that they lack the time necessary to translate those outcomes or consequences into the bottom line impact for their business. But you can do it for them. If you have a higher performing product with a premium price, it's up to you to give the buyer the ammunition to go to their boss and justify why they are spending more money than they would by using the lowest price product. You may be thinking, hey, we do this already. And maybe that's true. But in my teaching and executive programs at Kellogg and my consulting work, I rarely see value clearly articulated on all 3 of these levels. Instead, I often see people describing their own company or product features. A feature could be a reason to believe that you can deliver a desirable outcome, but we need to focus on the outcomes that our product creates. Secondly, I frequently hear companies claim that their value is relationship, or easy to use, or highest quality, or most reliable, or of course my favorite, a complete solution. These are what I call feel-good statements. These are empty words, overused to the point of having lost their ability to convey differentiation. Are any of your competitors claiming to have low-quality, unreliable products that don't solve the customer's problem? Why do we see this all the time? Well, because it's expedient. In a short marketing or planning meeting, everyone can agree that their offering is a high-quality, complete solution. Getting more specific requires insight, debate, and time, but it's necessary to generate breakthrough results. A third problem is that value is a relative term. We can't talk about value unless we are comparing 2 alternatives. For example, the value of using your product when compared to the customer not using any product at all may be quite large. But much of that value is likely to be a point of parity compared to your strongest competitor. The problem is that if we spend time talking about points of parity, then our true points of difference get diluted. Our customers tune out even before they hear how we perform better. So here's what this looks like when it's done right. We had a client who made hoses and fittings that went on large industrial equipment. When we asked them what value they created that their customer could not match, they said, "We have the best preventive maintenance in the industry." Well, that's not a statement of value, so we worked with them to fully understand the differential value on all three levels. Their customer could predict failure and replace the part to avoid downtime without waiting for physical or visual evidence that a failure was likely to happen. This predictive ability eliminated one machine downtime incident per year, which had a $2,300 downtime cost savings per machine. Now their customers could make an informed decision about whether the price premium was worth it and justify paying more to their management. Great marketing is not about tricking or cajoling the customer into buying your product, but rather helping your customer make the best purchase decision for them. The hardest part, of course, is achieving the level of quantifying value in monetary terms. To do this, your organization needs to be able to build customer value models, which are data-driven estimates of the value actually delivered to customers. First, focus on just the points of difference with the customer's next best alternative to your product. List each performance difference and its outcome to the customer as a point of difference. Try to focus on the most important 3 to 5 points of difference. Any more than that is likely to be overwhelming to both your analytical resources and to the customer. You also have many points of parity with your competition, where your offering performs at roughly the same level as your competitor. By definition, if your product performs at parity with the competition, the differential value is going to be 0. So why clutter your analysis with this data? In fact, it's better to drop them from your analysis altogether. Then, for each point of difference, write what we call a value word equation, which is a statement in words of the formula that would most accurately measure the differential value. Here's a simple example for the value of having a lower failure rate. This equation simply takes the difference in failure rate per hour and multiplies it by the number of hours in use during the year times the average cost when a failure occurs. Notice that in every value word equation, there is always a performance difference between our offering and the customer's alternative, shown here in red. Remember, no performance difference means it is a point of parity, so we don't even need an equation. These equations create clarity between your team and your customer about how value will be measured. They also provide the structure and the requirements for the customer value model. With the customer value research design established, it's time to gather the benchmark data from customers who use your and your competitors' product. This data is typically not in your CRM. If your offerings are connected to the internet, you may be able to use some of that performance data. For most of the data, you'll need to go to your customer. This is good. This is a process of joint discovery with the customer to create a shared understanding of value. Don't feel like you have to get 100 customers to participate. We usually start with 8 to 10. Be clear about what you are asking the customer to give you and what they are going to get in return. In other words, what type of data are you seeking and how will it be used? The most motivating gets for the customer are a free resource to understand their business. We often identify ways that they could better utilize our offering. An opportunity to benchmark versus the peers. This is surprisingly motivating, and we can usually stop here. But for reluctant customers, we might also offer earlier access to some new product or service that might be coming out. We could offer some kind of personal reward in terms of an honorarium or a donation, or simply a lower price in the form of an initial use discount or pilot program discount. Actually, I've never had to lower price in order to get people to participate in this research, but I have it here for the sake of completeness. Once you have the data put into your equations, you simply sum up the value of each point of difference to get the total customer value. Building your first customer value model is always your hardest. Many parts of the value model, such as the equations and some of the data, are reusable for other offerings. With experience, you can become very efficient at customer value research. Just avoid these three common problems. First, many models are built on unrealistic assumptions in favor of our product. We call these assumption-heavy, data-light. This invites the customer to question the results because it doesn't reflect how their business works. Wherever possible, gather data rather than rely on assumption. Make those assumptions explicit so customers understand them and can educate you on whether they reflect how their business runs. Second, many managers have pursued a total cost of ownership approach. By definition, this requires gathering the data for any financial impact that using the product has on the customer. That data request is usually quite large and many customers won't participate because they just don't have the time. Unless it's a highly strategic, multi-million-dollar capital-intensive project, TCO, or total cost of ownership, is just overkill. As I mentioned in the previous slide, a point of parity, by definition, has no differential value and therefore doesn't affect the purchase decision. Focus your customer value model on just the points of difference to simplify and accelerate the process. Lastly, many managers wrongly believe that you need many data points to have worthwhile research results. But when 4 or 5 data points line up, most managers believe that they are directionally correct, with good reason. With 5 randomly selected data points, you can be over 93% confident that the median for the overall population will be in between that high and low value. So as long as your low value is still motivating to your customers, they can be highly confident that they will get at least that much value from your offering. Customer value research helps you drill down on what's really important to your customers and build convincing claims of superiority on those dimensions. For example, we had a medical device company who licensed their underlying technology to their biggest competitor, so both our clients and the competitor's devices had identical performance. The only difference was that our client's version was, quote, easier to use. Despite this ease of use advantage, our client's market share lagged behind their competitor. We quantified the value of being easier to use. It turns out that being easier to use enabled the customer to use less expensive, lower skilled workers on the instrument. With those cost savings quantified in a convincing way, our client became the market share leader in 12 months. As you saw in the previous example, having the customer insight that easier to use really meant ability to use lower skilled and therefore less expensive labor enabled our client to dramatically improve their marketing. First, they segmented based on value, which in this case was high versus low cost labor, and targeted labs with high cost labor because the value would be the highest for those labs. Then, instead of saying the instrument was just easier to use, they not only talked about but also quantified the financial impact of using a less skilled technician to run the instrument. This made a more compelling value proposition. They could have raised price and sacrificed some market share gains, but they chose to convert their value into more profit by gaining share at their current margins. Other clients have used customer value research to identify value drains or things that we do for our customers that cost us more to deliver than they are worth to the customers. This can be a good response to a request for a price discount. Don't just lower the price, but find some add-on service or additional requirement that is relatively unimportant to the customer but costly for us, and give the discount in exchange for them relaxing that requirement. It's hard to negotiate like this if you don't understand customer value at this level. Lastly, you can identify what drives the most value to your target customer and feed those priorities back into product development efforts. Best practice firms require some customer value justification by the second or third gate in their new product development process. When using customer value data to improve your marketing mix, watch out for these common problems. First, be open to rethinking your segmentation based on the insights from the value model. I often see managers start with previously defined segmentation. Do the research to find new value drivers, but still cling to the original segmentation scheme. Second, most managers are seduced by the sheer size of the largest segment. The argument goes, if we target the biggest segment, then achieving our sales goals will require a lower market share, which feels more achievable. Don't get sucked into this line of reasoning. Target the segment where you have the largest customer value first. Dominate that segment and expand from there. Third, some managers just can't believe that less is more when it comes to how many benefits to communicate to customers. If the value model shows that 90% of the differential value comes from just one or two benefits, only talk about those and don't confuse the customer with the small stuff. Use the insights from your research to focus your value proposition on what will resonate with customers. Lastly, some managers believe that good pricing means capturing all of the customer value for ourselves. But if we take all of the value for ourselves, what incentive is left for the customers to use our product? In B2B, we are often doing business with customers over many years and across multiple products. It's important that our customers feel that our prices are fair and reasonable, or else they will switch the moment our competitor closes the gap. Further, they may try to punish us for unreasonable pricing on one product by giving business to our competitors on another product where we have closer performance. We don't have time to get into the details of value pricing here, but the customer value model is the foundation for effective value pricing. Here's an example. We had a client who made contact plates. Hospitals and pharmaceutical labs put blood and other samples on contact plates to test for bacteria and viruses. Buyers think of them as a commodity because they have to react to the sample in exactly the same way no matter who made the contact plate. The client had changed their manufacturing process to lower costs by 10%, but now the lids needed to be pinched a little bit in order to open them. The lids stuck a little bit, which the client viewed as a nuisance for the customer, so they were going to share the cost savings and lower price by 5%. Sounds like a win for everyone, right? Well, we conducted customer value research and found out that lab technicians routinely stack 10 or 20 plates on top of one another. These stacks are often knocked over and the plates fall on the floor with the lids coming off. The lab has to redo all of the tests and file a report. It turns out that the cost of retesting and report writing was over 75% of the cost of a plate. Instead of lowering price by 5%, we raised price by 20% and still hit the volume targets. By quantifying customer value, our client increased price by 25%, which all fell right to the bottom line. Now, with this ability to estimate value specifically for each customer, you will want to arm the sales force with value-based sales tools to prove the value to their customers in selling situations. This is an example of a value calculator. It shows the differential value of our product, in this case the Kunst 1600, versus the competitor, the Airmaster, for each meaningful point of difference. In this case, there were two main benefits because the Kunst pump didn't require oil changes. First, it eliminated the costs of all oil changes, And second, it freed up technician time to complete more jobs, so that technician generated more revenue. The differential value was over $600 per pump per year. Then the value calculator shows the differential price, which was about $16. You'll notice we split out price from value. As Warren Buffett says, price is what you pay, value is what you get. Then the value calculator shows you the total value in use, or the incentive for that customer to use the offering, which in this case is over $600 per year. These value calculators are incredibly powerful with customers, but we see three common problems that limit the effectiveness of value quantification sales tools. First, using Microsoft Excel spreadsheets is fine, but you have to be very disciplined and consistent. If the sales force sells 6 products that have value calculators, but each spreadsheet looks and works a little differently, they will rebel because they don't feel they have the time to learn how to use them all. Plus, they lose confidence in their ability to understand them. Second, salespeople will be worried that they will get questions from their customers about how the calculations were made, and they won't be able to answer them. It's a reasonable concern. No one likes to look bad in front of people whose support they need to be successful. Make sure it's easy to understand how every number is calculated, and provide a backup white paper or video with a clear description of how the research was conducted. Lastly, provide some sales support for gathering the data with customers and sharing the results for the first couple of times that the salesperson uses the value calculator. Once they see the power and simplicity of it, they will be ready to go it alone. HP was a client of ours, and their backup system for data centers was lagging in 4th place. They knew their system had fewer backup failures, but customers just didn't see the value. We quantified the value using a value calculator, led a webinar for them to share the results of our value research upon which the value calculations were based, and created a white paper of the research results for the sales force to share with customers. In 18 months, they became the market leader after spending years in 4th place. So now you have a deeper understanding about how to quantify customer value and convert it into growth and profitability for your products and services. You've seen it generates tangible results. Everyone would already be doing it if they knew how to avoid the mistakes that derail these efforts. The key is focusing the effort where you get the fastest and largest payoff. We've built hundreds of customer value models. You saw just 4 of many success stories that our clients have generated. You don't have to reinvent the wheel here. Yes, you can create more sales and profit by getting credit for the customer value that your product or service already delivers using our proven strategies and tools that you learned today. The process takes 3 months. So next quarter, you will know why your sales and profits have been disappointing. You will know how to increase your average realized price if that's how you want to convert your value into profit. You will have a strategy and tools to increase your sales conversion rates and grow, and can begin applying them to grow other offerings as well. And lastly, you won't have to worry about explaining why your product isn't hitting its goals. Just to recap on what I promised you today, I said that I would show you how you can better understand what your customers value, which I did using the 3 levels in Capability 1. Measure the value in terms that matter most to buyers, that is money, using the points of difference and value word equations in Capability number 2. Recognize the most common mistakes in quantifying customer value and how to avoid them. Use the customer value analysis to improve your marketing, such as segmentation, targeting, pricing, and so on in Capability 3. And lastly, recognize the most common problems when using value calculator sales tools and how to avoid them, such as driving for consistency and appropriately supporting your sales team, which we discussed in Capability 4. I hope I lived up to my end of the promise, because the good news is you have a choice. You can take what I've been talking about and do something about it now, or you can do what you've always done and continue to get the results that you've always gotten. But if you're still here right now, that tells me that you want to take action and move to best practice. Here's how I can help. I've seen managers successfully quantify the value of their offerings, improve their marketing mix, and create effective value-based sales tools just using the concepts and tips that I shared here. But they usually run into issues that they haven't seen, go down unproductive tangents, and take more time and resources than necessary. I can be your coach, providing expertise and leverage. If you need supplemental analytical resources, I can provide that too. Over the course of 3 months, I help you assess your current performance to focus your efforts where the payoff will be the greatest. In addition, I bring a proven, detailed, step-by-step process to generate the best results with the least amount of effort. If you prefer, we can do the analysis and sales tools using Excel spreadsheets. But you'll also have access to our powerful online suite of tools to more efficiently conduct customer value research and more effectively prove your value to customers in selling situations. If you're interested, you can go see a demo at www.customervalueexpert.com. That's customervalueexpert.com. That being said, this is not for everybody. There are some requirements for this. You must have a product that outperforms the competition on some dimension. You have to feel that relying on the marketing approaches that everybody else is doing will not generate above average results. So you have a desire to learn the latest methods and tools to stay ahead of your competition. And you realize that the best career opportunities are going to go to those who consistently generate superior growth and profits where others have struggled. If this describes you, and of course you're committed to reach your goals, click the button on the bottom of this page or go to bit.ly/talk-to-Eric. That's bit.ly/talk, the number 2, and then Eric. And sign up for a free half-hour phone consultation with me to discuss your situation and brainstorm the best way for you to get results. Now it's time for questions, but the first question is for you. What would having more sales and higher profit margins mean to you? Or conversely, what happens if you don't deliver on your sales and profit goals? Now, the first question I always get, so I've even prepared a slide for it, is why is he doing this? Well, I love innovating and managing customer value. It's the most fun part of business. I teach at the Kellogg Business School, not for the money, but because I genuinely enjoy helping people. Once we speak and I identify ways to take your sales and marketing to the next level, you may want help. And if that's the case, we can talk about that. But either way, you'll get real help regardless. As I mentioned earlier, I hate selling. If it's a fit, great. If not, that's fine too. But you'll at least have the direction you'll need to start getting results. So please click on the button on this page and schedule a call with me. Okay, now time for some of your questions. Here's one I get frequently. Eric, what if we do the customer value research and find out that our product doesn't create the value that we thought? Well, that's a great question. While that's not the result that we usually get or that we want to see, you still get value out of having done the research. You did the research because your sales and profits weren't where you wanted them to be, and now you know the reason. Your offering in its current form is not meaningfully better than the competition. You can use that knowledge to level set expectations with your senior management and shift resources to developing an offering with valuable points of difference. Your customers aren't stupid. You won't be successful trying to trick them into believing things that are not true. We do have a separate set of strategies and tools to decommoditize a commodity product, but that's a whole different webinar. Let's see, here's another question. We've already invested a lot of money in value selling training for our sales force with pretty mixed results so far. How does this fit in with that? Maybe our customers don't buy on value. Well, this is the secret ingredient to make your value selling investment pay off. Think about it. We trained the sales force to sell value, but we didn't give them the tools to quantify the customer value and prove it to customers in selling situations. This approach provides the sales force with the most compelling piece of content to close a sale. How much the customer's bottom line will be improved by using our product. I want to be mindful of our time, so let's wrap it up here. If you have any additional questions, please enter them in the chat and I will respond by email, or book a free appointment with me by clicking on the box on this screen. With Axios, what you see is what you get. I roll up my sleeves and work directly with you every step of the way. But that means that I can only work with 5 or 6 clients at a time. I'm currently engaged with 3, so talk to me right away if you have an interest. In our consultation, you will share what your current situation is. I will share alternatives that I have seen managers in similar situations successfully pursue. We can discuss the advantages and disadvantages of each path and what to look out for. I can't get you to best practice in a 30-minute phone call, but I can get you going in a more productive direction given your starting point. Take advantage of this by clicking on the box at your screen and book a time with me. I appreciate the time and thought that you've given me today. I hope you feel that I've lived up to my promise. Good luck in measuring your customer value and converting it into growth and profitability. I hope to hear success stories from you all.